Welcome to Investors Insights, episode number 193. Today we will be discussing, will your portfolio have happy holidays? And don't forget to connect with us on Facebook, LinkedIn, and Twitter. We'd like to continue this discussion there. So let's get right to the topics that are important to today's investors.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from Five Plan Partners.
Good morning, gentlemen.
Morning.
Enjoyed our early morning meeting. Very upbeat. Of course, there are no guarantees in this market, but we had some data that I was very excited about that I think can have an impact on portfolios. Bobby, why don't we start with you? Talk a little bit about positives that you were seeing.
Yeah, so last week we discussed the positive economic reports coming out, consumer spending, manufacturing, housing. This week we want to focus on the corporate earnings, corporate profits, because, up until third quarter, we had 5 quarters of declining earnings. And so we're very concerned about that. With third quarter earnings to come out, and we're very positive, so we're very excited about that. In fact, corporate profits rebounded up 6% quarter over quarter, so we need to keep that momentum going.
Right.
We've seen top line growth look very strong, so that's looking really good.
Right. Last time I checked, profits and earnings make stocks go up.
They do.
Right. That's very important. It's, just for what that's worth. So, and then actually you talked about everybody's working here. Talk about that, or a lot of people are working.
They are indeed. The U.S. economy created 178,000 jobs in November, which drove the unemployment rate down to 4.6%. Very good.
Right.
In addition to that, even though we had a little bit of a downtick from last month on wages, year over year, we're up about 2.5%. More people working, making more money.
Okay. So if more people are working, making more money, this consumer confidence that we're seeing right now means people could very well be spending money during the holidays. So as we conclude fourth quarter, going into 2017, which isn't that far away, that we could see the market react to that. Is that correct?
Absolutely.
Could be good for earnings going forward.
Absolutely. All right. Well said, Trey. All right. Now, Trey, there's a theme going on around here. Talk about that a little bit.
Yeah, so kind of continuing the really surprise populist movement from the U.S., from Brexit, the U.S., and now back across the pond. Italy's prime minister announced this morning that he will be resigning after he lost a referendum vote to restructure their constitution. That was kind of a surprise. And so just kind of showing the continuation of populism across the board. Not really the exact same political party, as it is in France or Italy or Great Britain. It's really just throwing out who's in power. Or reducing that power. And so that's kind of been this positive, because the reason the voters, according to the polls, the reason the voters in Italy did it is they saw no downturn in the U.S. for electing a President Trump, or no downturn in the U.K. for a Brexit. So what's the downside of trying something new?
Right.
Which can be good. In addition to that, last week we always like to point out when we're right, but I think last week we may have been incorrect. We called for the OPEC meeting to end in a no decision. They surprisingly decided to cut production by 1.2 million barrels.
Correct.
At least for now, that appears to be that's the party line. OPEC tends to cheat here and there. They use the black market to get oil out that they've already pumped anyways. But that's allowed oil prices to jump 10%. That's great for U.S. oil companies. We now produce a lot of oil in the U.S.
Right.
We're kind of the marginal producer, so that's good. But to the people watching it, you may see a spike in prices for the next few weeks, which just be prepared for that. I don't think it'll be too drastic.
Well, it's the first time that OPEC has come together in a while.
So the first time they broke apart was, I think, November of 2014. And ever since then, it's just been all hands on deck.
Right.
Produce as much as you can. They're one of the big things that may cause it to fall apart is they're banking on Russia, a non-OPEC member, to cut production as well. And we'll see.
That may not happen.
Yeah, promises from Russia. It'll be interesting.
To see if they live up to that. That's exactly right.
The final meeting is December 9th, so it's not a complete done deal yet. And if you look at historically, the deal was falling apart in the past.
Sure.
So December 9th meeting is important.
It's an agreement to have a meeting about an agreement to have a meeting.
Exactly. Right.
Yeah. So that thing goes on. And on that note, December 9th, we're looking at OPEC. And then December 14th, we're also looking from the standpoint of the Fed to make a decision about interest rates, which we will be discussing next week in our blog. And also, if you go to our past blogs, you will see kind of our thought process on what interest rates were doing, where the direction we thought we might go. Now we're here. So we're looking forward to that discussion next week. So on that note, we hope you have a great week yourself. We're going to keep you updated, but a lot of positive news as we approach year end. Who knows, we may see a Santa Claus rally, and we're going to keep you updated through all of it. Thanks again. Talk to you soon.